This was a great trade that we had in Trade the Close. NIO exploding this morning, even though the market is down. Really nice volume profile chart. You guys know I love my thin zones, and NIO is gliding right through this. No surprises here with NIO gapping up pre-market. Next up, y'all are looking at, or Jimmy Ray is looking at Fro. So Fro made a nice move higher after it reported earnings. It did break out of the volume profile. I wanted to take my key Fibonacci level of, or at least close around 14, move a little bit over this 1450 level. And if it continues to make these nice bullish steps, I have an upside target in Fro of $16.50, $70. FRO, Frontline Ltd. And last up, got to do a little special shout out to Kenny Glick and Solid Jello. They were trading the close. Literally, they took over the show while I was on the road, and it was really cool. I called in the show with a bombshell bull, and I was watching you guys from the road, from the road, trading this nice bombshell bull to the upside. So that brought a lot of joy to me, and I hope that you guys had a really nice time trading with Kenny and Solid on Trade the Close and trading in that bombshell bull. It was really cool seeing you guys make money live. We're going to bring in Mark Sebastian to talk some more about trades. Big Pete is looking at NIO, Jimmy Ray, Fro looking bullish, and we just had to do a special shout out for the QQQ bombshell. Mark, any options flow confirming any trades in NIO or Fro?
Well, we've seen not in Fro. NIO's just a super active name. It's not a perennial number top 5 like it used to be, but it's been super busy. And this is one that it keeps trying to break new lows, gets a little bit of a pop. It did break the 50-day moving average and hold it on Friday. It's up again. What's kind of your price target here?
17.
All right, so if we're looking for 17, it is going to be an extremely short-dated trade.
Okay.
And I think that, to Kenny's point, maybe we pull back a little bit today, and then maybe we move higher, maybe we don't. But if you think we're going to completely take off, I'd be looking at the December 14.5 calls for next week. We're up about $1. They're going to be pricing themselves this morning about 80 cents. So what I want to do is let this thing come back. I don't want to pay 80 cents. I'm going to pay 65 cents. So what does that mean? That means we're trading about 13.5. So we're gonna right at the 50-day moving average, right? The 50-day moving average is it's way lower than there. So we're just assuming that it's going to hold the 50-day, and we're going to buy it, a little bit above the close from yesterday. So we're going to try and pay 65 cents on the 14.5 calls for next week, December 16th. 14.5 calls, 65 cents.
Nice little play to continue trading the upward movement in NIO. Mark, thanks for the trade. Let's get into your VIX forecast. What do you have for us this week?
Well, we continue to be in a contango. But there's some formations around the curve that I think are very interesting when it comes to volatility and the VIX. Obviously, you can see that contango. Now, I think there's some important things that we have to pay attention to. Number one is the spread between the cash and where that December future is. So the December future does not have a lot of time. It expires on the 21st, so about 2.5 weeks. And at Friday's close, it was trading at about 2.2 points premium to the cash index. That is extremely wide. That is normally we would expect that December future to be trading about a point and a half above the index, not 2.2 points. That's huge. And then we continue to see the back end of the curve, January on, trade at a just massive premium to where that front month future is. And it just tells me that they still don't trust what they're seeing in front of them. They're still trading this like they're extremely wary. Now, it's definitely come down, but here's what I will say is typically when you have an overly wide curve, it is going to normalize itself. And the futures traders are usually right. And the guys that are trading SPX that where VIX itself is priced off of are usually incorrect. So, we've already got a little bit of normalization this morning with vol with the weekend effect coming into play. But I got to tell you, I think I'd be maybe buying December calls, and I still like being short January. I like being short January, buy puts, and different types of trades a lot. So I might be looking at a calendar spread long D's short Jan, to get into the weeds. But from a more macro perspective, from just how does this affect your portfolio? The VIX has not bought into the we are in a completely safe place.